Good morning. Market Day Report is on the air. We're preparing for another big day of trade, but let's stop and see how we traded in the overnight session. We'll start with the corn market. In Chicago, higher. December up 3.5, 444 3/4. This on the hill of a lower trade in the session yesterday, with the exception of that July contract that moved higher, but overnight up 3.5, 444 3/4. Soybeans were lower yesterday, higher in the overnight session, up 12, 1031 1/4. What about the wheat market? Higher in, well, across the whole spectrum. Chicago yesterday was higher, gained another penny and 3/4 overnight, 537 3/4. Story for hard red, almost the same, except a 3-cent loss overnight to 535. And spring wheat also lower, December down 2 at 636.5. Cotton market was lower in the session yesterday, higher in the overnight, 69.92, up 40. All right, Brian Hoops, Midwest Market Solutions. Brian, as we start the morning, I got to looking for a flash sell, and we haven't seen one since April.
Yeah, good morning. It's been a little while since we've had any sales. It was last week we had a couple corn sales, and market really didn't react too positively to that. And so far, nothing this week. Now, probably the biggest news over the weekend or overnight is that Chinese officials are meeting with Treasury Secretary Bessent and Greer in Switzerland later this week. So at least the U.S. and China are starting to negotiate and make some conversations about what is possibly an end to this trade war. Now, we don't expect that they'll reach an agreement. Maybe best case scenario, they start to lower some of the tariffs. Instead of 145% tariffs, maybe we get something lowered below that, maybe into the 50% range or something along that line. That's what the trade is going to be looking for, is if we reach or we make some progress, or at least make some headway into an agreement with China. So you had sharp moves higher in crude oil, S&Ps, the grains overnight. Now, crude oil's actually started to trade back lower. S&Ps are well off of their highs and trading just slightly higher right at this time. And so the grain markets will struggle, I think, during the day session here to hold on to these gains, because there's unlikely to reach an agreement and just not much else as far as export news or positive news to push us higher. Now, forecasts are calling for rain, and there is rain falling right now in parts of Oklahoma and Kansas. That'll help that winter wheat crop out. But next week forecasts, if we're looking at 80s and 90s in some of those areas, we may start to see those crop ratings slip in upcoming weeks, and that may be enough to put a low in that wheat market, which would certainly help out corn and beans as well.
All right, Brian, hey, hang on just a moment. We want to come back and talk about livestock futures. Market Day Report continues in a moment. So cash has already developed this week, and we're steady to $2 higher. More on that in a moment. Now, as we prepare for the opening of the livestock markets, how did we settle the session yesterday? We'll start with live cattle. Up a couple of pennies on that front month, June at 213.67. August gained 3 dimes to 209.37, and the October at 206.87, up 47. What about the feeders? Well, feeders moving higher with one exception, front month May, which slipped 37 to 295.70, but look at that August contract. Look at the number on the far left, 299.90. That means we were a dime away from hitting $300 a hundredweight. Could it happen today? 299.20 is where we settled yesterday, again up 30. Hog trade yesterday was under pressure, 70 lower front month, with June down $1.42 at 97.57. Let's bring back in Brian Hoops, Midwest Market Solutions. Cash a little higher too.
Yeah, it was. We saw the bids starting to develop around midday in that 218 range, and that's pretty suspicious on a Tuesday to get bids already. And we turned into some cash trade by the afternoon, 218 all the way up to 220. So steady to $2 better trade in the Southern Plains. Obviously, more trade to develop today, Thursday, Friday, as we go throughout the week. But Packers telling, kind of tipping their hand that they really needed some cattle. In the early stages of this week. So they've slowed their slaughter pace down compared to a year ago, but they're starting to improve it or increase it once again compared to last week. So we're actually slaughtering more animals than what we did a week ago. The cutouts so far have held and moved higher. They were $9 higher roughly last week in the choice, 7.5 in the select. They're higher again this week. Can they sustain these gains and continue to push higher? Because Packer margins aren't really improving. They're still about $154 in the red because of the Packers being forced to pay this higher cash market. So we're close to that, major levels, 300, like you mentioned. May get there today, or at least the early part of later this week. We may get to some more cash trade at these higher levels.
So Elliot Dennis, University of Nebraska at Lincoln, I heard him earlier this week just say, you know what, we found out something by feeding these cattle a little longer than we have in the past. Quality is actually moving up. So kind of a byproduct of feeding a little longer. Okay, from that over to crude oil. And West Texas Intermediate, we saw it move higher yesterday. What are your thoughts here on WTI?
Yeah, it rallied overnight above $60 a barrel, took out a little bit of resistance. Now it's pulled back near that $59 area. We're supplying a lot of product across the world market. U.S. is increasing supplies. OPEC has increased supply as well. Now the markets have kind of absorbed some of this news in hopes that we will be able to export more product, especially to China. So this China news that we heard overnight, that was supportive to crude. Now, during the day session here, can we sustain those gains? Of course, we have an EIA report at 9:30, FOMC meeting later this afternoon. It could be very choppy, very much a consolidation type affair for a lot of the energy and equity markets.
And we'll end with gold and silver, both moving higher in the session yesterday. Is there more oxygen, if you will, for both?
Well, gold's had about a $200 run in just 2 sessions. So maybe it's running out of oxygen here for a minute, needs to take a pause and catch its breath. I certainly wouldn't be surprised. It may consolidate as well with this FOMC meeting this afternoon. It seems like when the stock market wants to move higher, there's money flowing out of gold and into the stock market, and vice versa. If we see a big drop in the stock market, money comes back into the gold market.
All right. Brian Hoops is with Midwest Market Solutions. We'll see you back here tomorrow.